gold and silver as a currency again. So I think that brings value. But now the new use for silver, I mean, it's already always been an industrial metal. But now that they're finding use for it in batteries as well, the demand is ticking higher. I mean, look at what's happened to the gold silver ratio. 6 months ago, it was about 100 to 1. It's about 40 to 1 or 45 to 1. So all of a sudden, things are coming back into line and silver is being fairly priced within the gold market. I mean, the original ratio was 15 to 1.
When it hits, like, if it goes 20 to 1, I'm going to swap for gold. I mean, 15 to 1, I'm definitely going to swap for gold. But I don't have any specific plans to swap for gold. I have plans to, when it's 15 or 20 to 1, I'm going to buy whatever's on sale.
Silver's volatility continues to outpace gold, reinforcing its reputation as the higher beta precious metal. Analysts point to major psychological levels ahead, with 5,000 gold and $100 silver framing long-term bull market expectations. Drawing on historical precedent, a multi-year silver cycle could mirror past exponential moves, potentially targeting $300 before consolidating at much higher averages. Have both emphasized using the gold-silver ratio as a strategic exit signal, anticipating extreme silver outperformance. While short-term consolidation and choppiness are likely near key technical levels, the broader thesis suggests silver could rise sharply and remain elevated rather than following a brief speculative spike. Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Gold and silver as a currency again. So I think that brings value. But now the new use for silver, I mean, it's already always been an industrial metal, but now that they're finding use for it in batteries as well, the demand is ticking higher. I mean, look at what's happened to the gold silver ratio. 6 months ago, it was about 100 to 1. Today, it's about 40 to 1 or 45 to 1. So all of a sudden, things are coming back into line and silver is being fairly priced within the gold market. I mean, the original ratio was 15 to 1. Okay. So now we're seeing it start to come back, and I think silver's got a lot of room to run, and it'll run because of the industrial use, but it is also more affordable for those who can buy it. If you're trying to buy gold, how many people have $4,800 lying around to buy an ounce of gold versus having, a couple of hundred to buy a couple of ounces of silver? That will also help it. It's the poor man's gold, and I think it continues to rise. I wouldn't be surprised if we see it hit 130 to 150 this year. But again, remember, I'm not telling you it's going straight up. There's going to be some pullbacks, and at the parabolic way that it's traveling up right now, we'll see some selling coming at some point. I think obviously gold is the most popular. I'm a big fan of platinum. Okay. Platinum to me, at one time, for those who remember, platinum was over gold. It was double gold. Okay. And then it became half of gold. Now it's about 60% of gold. But I think that the basket approach, buy them all if you can approach is good. I mean, they're all going to have ups and downs. But certainly the most popular still will be gold, followed by silver, and then followed by platinum. But I think platinum is showing you that there's some real strength behind it now. And of course, it's up about 190% since last year over year. Personally, I don't own or typically trade the mining stocks. I own some what I would call cheap, inexpensive gamble plays. I mean, I own personally First Majestic, which I've been buying it since it was $4. It's now in the 20s. SLV, which is a good ETF. But again, at the end of the day, I'm always a much bigger fan, again, depending on why you're buying it, but I'm a much bigger fan of physical metals versus buying the equity or the miners against it. China owns the London Metals Exchange, and that China at one point in time allowed loan value off of copper. I'm assuming something's going on in China to hold these prices up here, because if you look at the housing market and the construction market, there shouldn't be that big a demand for copper. Okay. However, on the uranium side, I think uranium is a great play, and I would be a buyer of uranium stocks and uranium, because at the end of the day, I believe that if you're a believer in climate change, which I'm not, but if you are, okay, and you want the cleanest, cheapest, best solution, better than solar, better than wind, better than battery, is nuclear power, which takes uranium. So to me, I think uranium is a great buy here, and I think a stock like CCJ, Cameco, which I do own personally, is a great play to go, and also URA. Some of the other ones, again, I think you want exposure to uranium because I think that it has a tremendous opportunity to go a lot higher. Copper, I think, is a little bit overdone in here, and I don't think there's as much room in copper.
Psychological price levels are becoming a central theme in silver's evolving bull market. Many analysts believe triple-digit silver is less a question of if than when, with $100 acting as a powerful mental and technical checkpoint rather than a final top. History shows commodities often pause or churn around round numbers before resuming higher. Some expect silver to briefly dip below $100 to reset sentiment before continuing its advance. Longer term, valuation through ratios, silver versus oil, housing, or the Dow, suggests silver remains undervalued. If the metal follows past cycles of peaking high and averaging higher, triple-digit prices may represent a midpoint, not an endgame. Let's get back to the interview.
Silver now, primarily, what is the proximate cause of this? I'm not saying, the dollar is dying. Yeah, the dollar is dying, but who are the ones that are buying silver triple digits enough to move the entire market? It's not stackers. Peter Schiff has his own Shita, has his own opinion on what things are going to look like in the end. And his opinion is actually pretty mild, that the epicenter will be in the United States, and as the dollar collapses, other currencies will strengthen. And since the dollar won't be able to suck wealth out of other currencies anymore, then other currencies will strengthen. Then other countries will do much better, and that's why he has his old non-dollar denominated assets thesis that he invests in. He also does gold miners, of course, like gold and silver and gold miners, and yeah, he doesn't abandon that at all. But he also believes that other currencies will do better, whereas I don't. But we're going to find out if that's true pretty soon. And I don't know. And I also wanted to share an analogy, a story with my son that it was very funny because he's teaching my youngest daughter how to play poker. And, so instead of using coins to bet on, he wants to exchange it for tickets, like derivatives. And like he tried to explain to her, like, instead of coins, I'm just going to make papers, and then we're going to put the coins in a box. And if you have, let's say, 10, I'm going to give you 10 papers. And he was trying to explain this whole system to her, and she couldn't get it. She's only 6 years old. Like she doesn't understand.
How old's your son, Rafi?
He's 11, going to be 12 soon.
Oh, that's pretty
So I said, Fry, you're explaining, a derivative system in a central bank. You're going to be the central bank in charge of the tickets, holding the box of money. And he said, yeah, I mean, the casinos do the same thing, right? They have chips that represent the dollars, and then you can bet with the chips, and then the casino holds the dollars. And then he said the difference is in the world, you can use dollars for anything. You can buy food with it, but you have to cash in your casino chips before you can spend them. So I said, I had this flash of insight. I said, Fry, that's why the entire world is a casino, because because we're all spending poker chips in a giant casino.
He's going to be
and that's why everything is a casino. That's why you have to bet everything in order to survive, because that's what we're in right now. And when the casino is over, the poker chips aren't going to be worth anything. It's sort of like the analogy that Phil used to introduce himself to us. I think they're a decent vehicle to make dollars with gold and silver. As long as dollars have value, then the ETFs will be useful. But once they don't have value, the ETFs are not going to be useful. So they're not any good for the end game, but for leading up to it, they can be pretty lucrative if you use them right. I mean, I bought SLV options when it first hit 50, because I advised my subscribers, like, it might be worth paying a few $100 for some contracts in case silver goes crazy after it hits 50, and voila, that's exactly what happened. So I bought them for like 76 cents, and now they're like $40. It's unbelievable. I do expect it to happen, and when it does happen, I do expect silver to crash one more time. All these companies or these actors, whoever they are, that are buying silver right now at $103.30, right? That was the last one. And they're buying it for whatever reason. They're stockpiling because they think the dollar is collapsing, or they can't get their silver, or they need their silver for whatever, solar panel, whatever they're building, I don't know. But these companies, I'm sure they carry a debt load. And whenever there is a deflation and there's going to be a rush for dollars, not because people want dollars, but because they have to service their debts, and that's still ahead of us. So all these actors that are buying silver right now, they're going to have to sell their silver for their dollars to service their own debts at some point soon. At that point, I would expect the silver price to crash one more time until the Fed starts printing again, and then everything just reflates to where it is now plus and then some. But do you see that happening? And if so, like, how extreme do you think it's going to be? Because I think it's going to be pretty extreme.
Silver's bull market is increasingly being framed as a generational wealth event, with much of the real upside expected late in the cycle. Historical market behavior, often described by the law of the parabola, suggests the majority of gains arrive in the final phase of a major move. Despite volatility and temporary pullbacks, silver continues to show powerful long-term strength when adjusted for inflation and measured on a logarithmic scale. Analysts emphasize the gold-silver ratio as a critical guide for managing risk and timing exits, expecting substantial silver outperformance ahead. With key technical levels broken and long-term structures unfolding, silver's role as a strategic store of value remains firmly intact. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.